Hi guys. This live stream that we are doing is for the celebration that we are doing for reaching 10,000 subscribers on YouTube. And given that we have achieved 10,000 subscribers, the journey has been uh, a short one, but a very interesting one because we have curated topics around business case studies. We have curated topics around options trading.
Just a second, let people join. We can wait for them.
Yeah. So अरे sir.
Start.
Hi guys, so we have touched 10,000 subscribers on YouTube. The journey has been a short one but quite an interesting one. So we have developed a few case studies around companies that are listed on the stock exchange, and at the very same time we have curated playlist that talks about options trading, that talks about how to trade small and mid caps, that talks about technical analysis. So been a couple of playlists that we have already curated on the platform, and at the very same time in the future we also tend to look ourselves creating topics around fundamental analysis of stocks, how to help investors or the budding investors to actually analyze stocks and pick up stocks for themselves. So that would be the entire roadmap in terms of doing the fundamental analysis part. Along with that, there will be a lot of case studies that we will continue to do, and there will be a lot of content around trading that will continue to post, goes without saying. So in this particular video, what we'll be doing is we'll be picking up a stock on the platform screener.in, and once we do that, we will be analyzing that stock and we'll understand how to exactly use screener as a platform so that we can do our analysis within 10 minutes, 15 minutes, 20 minutes, 25 minutes, or whatever time span you want to spend on that platform. And the whole idea of using screener.in is to assure that we are able to filter the stock, whether we want to do further research on that stock or not, or whether that stock is even looking investable to some extent or not. So on that aspect, screener.in is a very good platform. There are a lot of users, lot of investors, right from the beginner level to pro investors to fund managers, who are using screener as a platform for analyzing and filtering out stocks. So we'll be doing that live here, and I'll pick up a stock from my own experience, where I have researched on a stock and I have used screener.in, and we will do a good quick fundamental analysis of that stock, and we'll see what all things we need to read before we actually think about researching further about that particular stock. So let's switch to screener.in. Alright, so we have the screener.in platform here. Alright, as you can see, we have the feed here, we have screens, we have tools here. Alright, and there are a plethora of things that screener.in provides. So you can see there are approximately 1100 quarterly results that have been announced recently. You can have a go at those quarterly results of all the companies, of 1100 companies at Screener. Screener also tells you about the upcoming results that are going to come of the various companies, the quarterly results. So that is something that you can look at. So these are the companies which are going to come up with their quarterly results. Likewise, for the companies which have already posted their results, we can have the market cap, the price, and their basic P&L items like sales, EBIT, net profit, EPS, and all those things. Alright, so a very quick summary of everything that has come in is something that we can easily find here. Alright, and you can definitely search for a particular company that you want to search. Alright, and lastly, when you open screener.in and when you create a login, you will see that there are notifications placed already for you. So this basically tells you about the new notifications that are coming for the companies that you have marked in your watch list. So like how we have watch list in our broker's account, in the similar way we have watch list here as well, where any new announcement made by the company, it could be dividend, it could be a bulk deal, it could be a block deal, it could be a right issue, alright, all those things, or it could be a board meeting that the company announces. All those things gets updated here. So it becomes a one-stop place where you get to know about the company, and I'm pretty sure screener sources the data from the right places, and automatically the data comes in here. Okay, all right. So now let's go to the part where we actually go and discuss how to read a stock, how to analyze a stock. So to begin with, let's just pick up a very small cap stock, goes by the name Shivalik Biometals. So I've entered the name, and the moment I entered the name, I have received, or I can see a plethora of fundamental pointers about the company, be it be the market cap, be it be the stock P, be it be the ROC, be it be the ROE. All right. Now the good part about screener.in is you can always edit these ratios. So right now this is the ratios that I have created for Shivalik Biometals. In the similar way, you can delete some of the ratios that you feel are not important, and you can add few ratios which you feel are important for you. If I give you a perspective, it becomes very important for a manufacturing company that we look at the EV by EBITDA multiple, the enterprise value of the company, and all those things. But when we look at a FMCG company, looking at the PE multiple is sufficient, or looking at the earnings of the company is sufficient. Looking at the enterprise value will not make a lot of sense for that particular company. Alright, so those things we need to understand how it works, and how we can make those changes. So for now, let's stick to the existing number of ratios that have been marked. In these existing number of ratios, what I'll do is I'll talk you through some of the important ratios, and then I'll also talk you through some of the key pointers or the key business insights about the company that we can read or screener.in. By the way, the ones who are watching this video maybe right now or maybe later, will be at the end of the video we'll be issuing a coupon code as well for our platform, so that you guys can start your learning and access your trading or investing journey on Upsurge.club. So in case if you're looking to sign up on the platform but haven't, that might be a right choice for you to really use that coupon code and go further with that. So now coming back to the ratios that we have. Market capitalization, again, this is, as I mentioned, this is a small cap company. The market cap of the company is around 3600 crores, which is not that huge from the perspective of listed space. The current price is 627. Now in terms of the current price, we can look at the 1 month, 6 month, 1 year, 3 or 5 year chart. The different part about screener.in is you cannot have minute by minute time frame, because this particular platform is made from the perspective of investors and not traders. That is why the minimum time frame that you have is for 1 month. Alright, so let's see how the stock has performed in the past 5 years. The stock has performed decently well in the past 5 years. It has gone up from the level of 85 to approximately 600 by now. So that is a good jump of at least 7x 8x from its starting point. So that in itself makes us curious what exactly this company is doing, what is happening with this company, and all those things. Alright, so as mentioned, we have the current price here, we have the high lows here. Again, the stock is trading to its all-time high. We have the stock P here. Now this is something that is very interesting. The stock P of the company has already gone up, has already zoomed up to 48, which indicates that it might be on the overvalued side, it might be on the expensive side. We'll also try to figure out why people are willing to pay that kind of price to this particular stock of 4850x. Alright, that answer will get it from the growth of the company, and at the very same time the business model of the company. So let's see that. Then we have the dividend yield. Since the company is into growth phase, since the company is looking forward to grow from here, but naturally the dividend that the company will declare would be on the lower side. This is not a high dividend yield stock, how we have ONGC and all those companies. Alright, so but naturally the dividend yield is on the lower side. Then we have the ROCEs and the ROEs. Alright, now this is something that is very interesting that we should look at. So ROCE is return on capital employed. So whenever a company starts its functionality or its operations, they can raise money through two things. One is through having equity, or basically the promoters putting in money in the company. That is one of the way the investors are investing the money. And the second is they can raise debt. Alright, so या तो आप पैसा उधार ले रहे हो, या तो आप पैसा अपनी जेब से डाल रहे हो. So the money that you're putting in from your pocket is the equity part, and the money that you are borrowing is the debt part. Alright, so when you combine these two, that is nothing but your capital employed. That is the money that you are putting in the company. Alright, so debt plus equity becomes your capital employed. Now on this capital employed, say for example 70 rupees you have put it in from your own pocket, and 30 rupees is something that you have taken as debt. So 70 plus 30 100 रुपए कंपनी में गए, 100 rupees has been ventured into the company. Now from this 100 rupee, or on this 100 rupee rather, what kind of profits are you able to make? Say for example, you have made a profit number on this capital of 20. It means that 20 divided by the amount of capital you invested becomes your ROCE. Now the interesting part here is that you need to look at the profitability at EBIT, EBITDA level and not at PAT level, because here the money of the debt holder is also involved. In the denominator you have taken both the money, you have taken the equity holders money and you have taken the debt holders money as well. So both of the money is involved, and that is how you calculate the ROCE. On the other hand, when I talk about ROE, ROE is return on equity. So the money that is coming in from your own pocket for into your business, the return that you make on that is your ROE, and that is simply calculated as the profit, the final profit after deducting for all the expenses. You divide that by your equity portion, or the money that you're putting from your own pocket. So that is your ROE. ROCE, ROE are 2 pointers that I think you should look at for every company, because at the end of the day, each company is made to generate profits for its equity holders and to make sure that the debt holders are repaid their money. So these are 2 important metrics that you should look at for each and every company. Alright, so that is one thing. Then we have, again, number of equity shares do not really matter. Then we have the quarterly sales, then we have the quarter profit variation, then we have quarter on quarter sales growth, then we have quarter on quarter profit growth, then we have the capital employed. Alright, so the ROC that I spoke to you about, 37.7%, was the return that was getting generated on this capital. Alright, so that is there. Then we have the enterprise value, and then we have the working capital, and then we have the debt to equity. Now the good part is that the debt to equity portion of the company is on the lower side, meaning that the company is not debt ridden. So the company has not taken up a lot of debt for its growth. The company has been able to manage its return using its own capital or the profits that the company is generating. So say for example, on a regular basis, whatever profits the company is generating, they're using that, they are deploying it back in their business, and on that capital itself they are making their profits. So that is again something that is very important. We have the export percent and the import and the domestic sales as well, the bifurcation of that. So the interesting part is the export percentage is 0. The company has been able to make sales within the country itself. So that is there. Then there has been a dividend issued last year as mentioned, but again very negligible in terms of the share price. Then we have the PEG ratio. Alright, PEG ratio is again something that is very important. Now to understand the PEG ratio, we'll have to understand the PE ratio first. So let's talk about the PE ratio. The PE ratio of the company, as I mentioned, is 47.4, which is a tad bit up on the higher side. So given that it's 47.4 or 48, what it means here is that you're willing to pay as an investor, as a person in the market, or as a market participant, people are willing to pay 48 rupees for that 1 rupee of earnings of Shivalik Bimetals. So goes without saying, if there is any other company which is trading at a PE multiple of 20, for example, so in that case you are willing to pay 20 rupees for that 1 rupee of earnings. So as an investor, you'll always be lured by that 20 rupee PE multiple, but you also need to look at the future prospects of the company. Now say for example, for Shivalik Bimetals, the PE multiple is 48. In that case, if the PE multiple is 48, what it means here is that the future profitability or the future number of the company might look better. I'll give you a simple example. Right now, price is whatever, you divide it by the EPS. Alright, now say for example the company does really well, and next year the EPS goes 2x from here. Alright, so price upon earnings, the price is whatever right now, and we have some earnings here. Now this, if the earnings double, alright, if the earnings double, automatically the PE would become half next year. Alright, and again if it doubles from that year, again the PE would come down further half. So basically the PE would move from 48 to 24 to 12, given the profitability doubles every year. Now the entire perspective of the investment world, or the entire perspective of the market participants, is to figure this out, is to look at these PE multiple, and is to look at how the future prospects of the company holds. So if the earnings is going to increase, then having a high PE multiple makes complete sense, because we know that in future the numbers are going to come, and the moment the numbers are going to come, automatically the PE multiple would come down to its normal average. It all boils down to the profits that the company is going to generate. So that is very important, looking at the future prospects. So whenever you see a high PE multiple, it's not the case that the company is very expensive and you should be getting out of it. What you need to look at here is that what are the future prospects of the company, and how can you know the future prospects of the company? By looking at the business of the company. And if the business of the company is into an industry which is growing at a very fast pace, automatically the PE multiple would eventually come down because the earnings would rise. Alright, so it all depends on the fuel that the earnings have, whether it is for 5 years, 10 years, 15 years to grow at that abnormal growth rate. So once that growth rate is there, automatically the PE would adjust in the future. But a high PE multiple does not always say that it is overvalued. That is why I use the word expensive more and not overvalued more, because in most cases markets are right in giving the PE multiple of a particular company, but the market also happens to look at what we generally miss out, that is the future prospects of the company. And here the future prospects might look good if we read the business of the company. Alright, by the way, again, this is all for an explanation point of view. Given that we discussed this particular company for 30-35 minutes does not mean that you take it as a buy recommendation or you take it as a sell recommendation. It's not for any recommendation. It's solely from the perspective of educating ourselves in terms of how to use Screener as a platform. Alright, now we have the about and the key pointers here about the company. So this is basically what the company does and what it is into, what manufacturing it does. The product portfolio will give us a very key insight in terms of what the company is producing, why the share price has risen by almost 8x 9x from its last 5 years price point. So the company is engaged in the business of manufacturing and sales of thermostatic bimetal trimetal strips, current sense metal strips, shunt resistors, SMD current sense resistors, and other electron beam welded products. It specializes in the joining of metals by various methods such as diffusion and all those things. Alright, now there are two important products that the company has. Alright, I have highlighted those. One is thermostatic bimetal trimetal strips, and the second one is shunt resistors. So obviously by the face of it, those are not coming from science background, those are not coming from engineering background, might not even get to know what exactly these two products are. So again, given I do not come from that background, automatically it was confusing for me as well the moment I read it at Screener. So that is when the annual reports, that is when forums like Value Picker helps us to understand what exactly these products do. So to give you an idea about the product of Shivalik Bimetals, since Shivalik Bimetals is into the manufacturing of shunt resistors, these shunt resistors are an important component to the entire battery management system of electronic vehicles. So the electronic vehicles, they have the batteries, they have the EV batteries, which is 50% of the entire component of the car. So that battery requires an entire system, and for that system to work, we need shunt resistors. So as you all know, there's a shortage of, or there's a quick demand of having these batteries, EV batteries, because there's a worldwide demand, there's a surge in the demand of the EV vehicles. So automatically there's a very good demand for it. So once there is a demand for the end product, automatically there will be a demand in all its verticals, be it be the batteries, be it be the components that are used in the batteries. So shunt resistors is one of those components. There are multiple countries that are into the production of shunt resistors. There is Taiwan, there is US, but given the demand is on such a higher side, the supply has flown down to countries like India as well, and that is why Shivalik Bimetals come into the picture. It is because of the tailwinds that this industry is enjoying. Shivalik is also able to do a fantastic job here, and that is, I think, one of the main component or the main contributor to the overall revenue of the company. Yes, as you can see, shunt resistors make somewhere about 52% of the total revenue of the company. Alright, then we have bimetal trimetal strips making about 46%. That adds up to, I guess, around 98%, and then we have 2% of the other products that the company produces. Remember, whenever you are confused about the business model or what exactly the products is the company selling, always go to forums like Value Picker, annual reports, investor presentations, and make sure that you are thorough with what the product is being offered by the company. Alright, so that is one of the most important aspect. Numbers and everything you will add up or you will relate it to later on, but understanding it from the business perspective is much more important, is always something that I feel for a fundamental aspect. Alright, so the company's products are exported to around 40 countries around the world. Alright, so in terms of revenue split, in terms of exports, the company is exporting in America, Europe, India, and others. Now see, there's one interesting thing that we need to notice here. Alright, export percentage is mentioned 0.0 here, but here the export percentage is mentioned 35, 13, 36 and 16. Alright, so there is some exports being made, so we need to check this properly in the annual report, because there can be instances when the data do not add up. So that is when we need to go back to our annual reports, which is the Bible, which will give you the exact information. But for reference, we can always look at this, and wherever there is a discrepancy, we can always go to the annual report and understand how it works out. Alright, now see, the company is also involved into expansion. Now, given that the company is involved into expansion, automatically the sales are going to come, and automatically the profits are also going to come, and automatically the earnings are also going to come. And since the earnings are going to come, the PE multiple is likely to go down. That is why the market participants have given the company a higher PE multiple, because there are expansion plans with the company, and the expansion is happening without even raising a lot of debt. So that is one phenomenal thing that is happening with it. Then there are some acquisitions which the company has made, so inorganic growth has also come in. So on all those fronts, the company is doing decently well. These are some of the updates that the company has made. Alright, so that is there. Now there are some. Now let's get back to Screener and see what all Screener has to offer for us. By the way, those who want to do some technical, those who want to give some technical touch to this, they can also add the 50-day moving average and the 200-day moving average to this. Again, you can compare the current prices with the moving averages and see how prices are turning out. So that is there, and you already have the volume charts here. Alright, so that is something that you can look at. Okay. Now, and at the very same time, in terms of charts as well, you can look at the PE ratio. So the PE ratio has also gone up in the past 5 years, because again, there is expectation that the company is going to do well in the future. Alright. Now we have some peer comparison here. So when we do peer comparison, we always need to go back and see the product portfolio, because the product portfolio is evolving. The company enters into different units, the smaller companies especially. So automatically the peer comparison, again, it becomes a good basis for us to see what all peers the company might have. But doing a thorough analysis of this will make a lot more sense. And again, as we added and subtracted columns initially, we can do that very same thing here as well. If you want to look at the profit of the past 5 years, if you want to look at the sales of the past 5 years, all those things you can do. There are almost every fundamental indicator included in this particular comparison analysis, or the columns that we have on Screener.in. Then we have the quarterly results. Again, whenever the company announces quarterly results, they either do it from a standalone perspective or they do it from a consolidated perspective. So we can look at both the results here, the standalone ones as well as the consolidated ones. You can see the company was generating a sales of only 30 crores in June 2020, which is also the COVID quarter. So let's not take that. Let's take the March quarter of 2021, which is around 67 crores. Now it has almost doubled. Alright, the sales have almost doubled, and the good part is you would see that the profit has more than doubled. Alright, so this is something that we can always explore. If the sales is doubling and the profit is increasing by more than double, it means that some operating leverage has come into the picture. I would not say financial leverage, because there's not a lot of debt on the company. So operating leverage could be the prime reason for the higher increase in profitability vis-a-vis the sales. So that thing again you can look at here. Then we have so these were the quarterly numbers. Again, whenever we do quarterly comparison, that this is one interesting thing that people miss out. So quarterly comparisons are done in two ways. One is quarter-on-quarter comparison, and one is quarterly comparison done on an year-on-year basis. So what I mean by year-on-year basis is you compare the June quarter of 2023 with the June quarter of 2022. That is year-on-year comparison. When you do quarter-on-quarter comparison, you're comparing the current quarter with the previous quarter. So those things are something that might confuse you whenever the company announces results. The reason why year-on-year comparison is done in quarters is because there are a lot of seasonal companies that are there in the entire scenario. So say for example, cement industry. So cement generally do not really perform really well in the rainy quarter. So the quarter that we have after June, that is July, August, September, in that particular quarter the sales of cement companies are naturally down. So it would be unfair for us to compare that particular quarter with the previous 2 quarters, because those were the 2 quarters when the company do well. So comparing the quarter with monsoon of this year and comparing the quarter of monsoon with the previous year makes total sense in the cement industry. So that is something that we have. Now how we looked at the quarterly results, in the similar way we can look at the yearly results as well. So we have the entire Screener.in here, where we have the yearly results of the company. Again, from yearly perspective, if you look at it, in the past, I think 5 years, the company sales have tripled. Or it has gone up from 150 crores to almost 500 crores. So the sales have tripled, and the profit has gone up by more than 3 times. The profit has almost gone up by 4 times, 5 times. So again, operating leverage is coming into the picture. The results are screaming and telling us that. But again, we need to deeper and figure out whether it is actually true or there are some discrepancy in the number. But it gives us a very good starting point in terms of knowing how things are with the company. Then we have balance sheets. Alright, balance sheet goes without saying. We have the share capital here. Then we have reserves. Reserves are nothing but your profits that you are earning in the past years, those are getting added up and they're getting included in your reserves. Then we have the borrowings. The borrowings number are on the lower side as discussed. Then we have other liabilities. Then we have fixed assets. Now we need to look at the nature of the business. The nature of the business is into production of shunt resistors and bimetal trimetal strips. Now since the company is into production, but naturally their balance sheet should have fixed assets on their statement. So that is something that we are able to see here, that the balance sheet has fixed assets. Alright, and at the very same time, balance sheet will have fixed assets, but balance sheet will also have working capital. So you'll see a lot of current liabilities and current assets here in terms of inventories, in terms of trade receivables, and those are already there. So 132.93 crores is the trade receivables and inventories that we have. Then we have trade payables of 42 crores. So yeah, it's already there. Okay. Now next up we have the cash flows. Again, there are 3 parts to any cash flow statements: cash flow from operations, cash flow from investing, cash flow from financing. Cash flow from operations talk about your daily operational activity, what kind of cash flows are you generating from your business. Alright, then we have cash flow from investing activity, which talks about the investments that you make. Say for example, you're purchasing a land, so your money is going out, so you'll see some negative cash flow happening here. Say for example, you're buying a machinery, again a negative cash flow would happen here. Say for example, you're selling a machinery, a positive cash flow would happen here because the money would come in. Likewise, we have cash flow from financing. Say for example, you are issuing debt, so since you have issued debt, the money would come in, so you'll see a positive cash flow in cash flow from financing. Likewise, say for example, if you have issued equity, so you will see a positive cash flow coming in your financing activity. So those things you can always look at. Now let's dig in deeper and see why we have a minus 18 cash flow from financing activity. So the one thing that the company has done is repayment of its borrowings. So again, the money has gone out, henceforth it's a negative cash flow. Then the dividend has been paid of about 5 crores, so that is again a negative cash flow. Interest is paid on the amount borrowed previously, so again that is a negative cash flow. Then we have some financial liabilities that we met in the last year, so that is again there, and in totality we have a minus 18 cash flow. Alright, so again very important. Then we have the ratios. Now ratios are something that you should handpick in terms of the nature of the business, and once you do that, that is when you can have your ratios here and do a comparison here. So for now, what I have done is I have figured out the cash conversion cycle of the company. So cash conversion cycle is basically कितने दिन में company का पैसा घूमता है in its business. So the number of days the company is buying the raw material and till the finished good is being delivered, what is the cycle of cash flow that is happening, how much quickly I am paying my suppliers and how much quickly I am receiving money from my from the people to whom I have supplied the finished good. So that is there. Again, shorter the better. For FMCG companies, you always see a cash conversion cycle of 10 days, 20 days because they're getting cash really fast. But for a manufacturing company, you'll always see the cash conversion cycle to be on the higher side. Then we have the ROCs. Again, ROCs are really good for the company. Shareholding patterns, again, the next up thing that we have is the shareholding pattern. Again, it's very important because for any company, if the shareholders are selling their own shares, we need to understand why they're doing it. If it is a personal reason, if there's an emergency, then it makes total sense. But in case if that is not the case, we should always look at why the shareholders are or why the promoters especially are selling their shares, and we should understand that with a pinch of salt and understand the reason exactly why they're doing it. Because if the promoters are themselves not bullish on the company, then there's no point of you being bullish on the company. So that is something that we should always look at. Alright, then very important thing. So previously, before 5 years, when we used to look at Screener did not have these documents. So right now they started having these documents where all the recent announcements, as I discussed, are there. But at the very same time, the annual reports which the company publishes, which is there on the exchange, BSE, NSE exchange, given that the company is listed on both the exchanges, The annual reports are placed here as well. So you can download the annual report, read the certain important topics that are there in the annual report, so that you can do. You have the credit rating reports here. So CRISIL and all those companies, whenever they issue credit ratings for these companies, it's right here. And then we have the conference calls here. Now this is my favorite part of stock analysis. Reason being, here you are able to interact directly with the management of the company. So conference call is basically a normal call where you as an investor along with hundreds of different investors come on a call with the management of the company, and the initial 10 minutes 15 minutes of the conference call is being narrated by the management of the company, where they discuss the performance of the company, what the past holds like, what the future holds like, and all those things. And then you get a chance to put forward your question and receive answers from them. So that is something that you can always do. These conference calls, they have a unique toll free number. You can simply call on that and attend it. It's very simple, like there is no cost involved, and the numbers are put across on the announcement. So that is something that you can always track. And now in case if you miss out on any conference call, you also have the transcript attached here. So that is something that you can always read in case if you haven't attended it. So that is there. Then we have the PPTs. Now these PPTs are nothing but quarterly update about the company, what we are doing, how we are doing, what is the business insight, how things are going on, and all those things. So again, very important thing. Remember, these conference calls and everything are optional for companies, but companies doing it gives a very good indication that yes, they are maintaining a good investor relations with their investors. Alright, so I think I've ran through all the pointers that we had in Screener. To give you a final good point about Screener is that they also have screens. This is and they have various tools. Say for example, we can run a stock screen using this tool, and you can have 10 filters or 5 filters or 3 filters, and based on 3 to 5 filters on Screener, you can basically download or get a list of shares that are meeting those filters. So I'm pretty sure you might have heard about strategies like coffee can investing or maybe cancel strategy. So these strategies are nothing but a set of filters applied to all the 5,000 stocks of the market. And once we apply all those filters, what kind of stocks do we get as filtered out stocks? So that same thing you can do on Screener as well. So say for example, they've already given us a custom query example where we can simply look at this particular screen and run it through. So say for example, I run it through. Now the moment I ran it through, I received these many companies, and there are more companies that are in line. So you can always increase the number of companies that are there in the entire page that you might be getting. And I think approximately there are somewhere about 80 companies meeting these criterias, and then I can dig in further and see what companies from these also will outperform the other. So all these things are there. You can download these data points in an Excel and then do your analysis there. So that is there. By the way, those who are new to learning Excel, we have a course on that as well. So Screener.in becomes a very good starting point for all the budding investors. For all the trading enthusiasts, we have a lot of content around trading on our YouTube channel, on our platform www.upsurge.club, the links to which we are attaching in the description below. But for the budding investors, we feel that there's a lot of things that we can learn as a beginner, and the moment we start learning that, it becomes very important for us to continue that learning approach and become a very good investor, as good as a fund manager in 2 years 3 years time frame, by a solid research and by a solid business analysis understanding. So I'm hoping that you enjoyed this entire live stream. I'm hoping even the ones who are watching it afterwards, you enjoy this entire process, and you can let us know in the comments what more topics you would want us to cover. And those who by chance missed out, will recreate this entire video and put it across, so that you get a very good experience also in terms of viewing and in terms of understanding the entire discussion. So those things we'll be doing. And again, those who haven't signed up on our platform can definitely do it, where we have done a lot of courses there. There are approximately 40 plus courses already as I'm speaking on 5th of August. We add 3 to 4 courses every month, so you'll get a lot of options there to learn. And the prices that we have put across for these courses are really affordable, and that is the whole purpose of making the platform, that to make learning accessible and affordable for everyone. So that is something that you can always explore, and I'm pretty sure you help us further in our journey of making this YouTube channel go from 10,000 to 100,000 in a matter of about 3 months 5 months time frame. Whatever you feel, whatever love you give us, and we'll be able to, I think, explode from that.